Hello and welcome to our webinar. Today we'll cover the Small Business Payments Toolkit webinar created by the Remittance Coalition. I'm Amy Vaughn with the Federal Reserve and I'll be your facilitator. Joining us is Mary Hughes from the Federal Reserve Bank of Minneapolis, Jim Smith from the Union Bank and Trust of Lincoln, Nebraska, and Attila Csutak from Fiserv. Let's move to slide 2 where you'll see the logistics for the call. It is being recorded and will be available a little later at fedpaymentsimprovement.org website, where you can find it either on the events page or the Remittance Coalition page. If you haven't done so yet, you can click on the webinar link you received after registering. This option offers a few benefits. You can watch the slides as they are advanced. You can type questions to us. You can download a PDF version of today's presentation, and you can even choose to listen to the audio through your PC speakers. I would like you to note, though, that the webinar performance does depend on your connection, so if at any time you're having problems, just pick up the phone and dial the toll-free number. As I mentioned earlier, you can submit questions for the presenters at any time by clicking the Ask Questions button in the webinar tool. We will be addressing your questions at the end of the call. Now, with all of that covered, we're ready to get started, and I'd like to welcome Mary Hughes.
Thanks, Amy, and thanks to everyone for joining us today. I'm Mary Hughes. I work at the Payments Information and Outreach Office at the Federal Reserve Bank of Minneapolis. And I, along with the other two co-presenters, were members of the work group of the Remittance Coalition, volunteers who created the Small Business Payments Toolkit. This document is designed to help educate small businesses like yourselves about payments in general and also to encourage the use of more efficient electronic payment types. In today's webinar, Jim, Attila, and I are going to cover 5 topics. First, we'll tell you a little bit about what's in the toolkit. Second, we'll describe basic payment types that are used in the U.S. payment system. Third, I'll cover some payment trends relating to business payments. Fourth, we'll describe why electronic payments can be beneficial to small businesses. And finally, in the 5th section, we'll cover important ideas that you should think about in order to avoid being victimized by payments fraud. Please note our disclaimer at the bottom of that slide. The views expressed today are those of the individual presenters and not those of our respective organizations. So what is in the Small Business Payments Toolkit? As you can see on slide 4, the toolkit is free, and it was designed to offer resources that small businesses and the people who serve small businesses, like bankers and advisors, can use to learn more about payments. The toolkit provides basic education for small businesses who want to move from a paper-based check environment to electronic payments. The toolkit is free, it's 32 pages long, and it can be downloaded as a PDF document on the website listed on this slide. It is not copyrighted, and we encourage you to share it with your colleagues, and you can even modify it or just take out specific sections as you wish if you have Adobe Professional. We're very pleased with the response we've had to the toolkit. It's been downloaded over 9,500 times since we introduced it in April. And it was created by the Remittance Coalition, which is a volunteer group that's about 5 years old. It consists of 450 organizations and individuals whose mission is to promote the use of electronic payments among U.S. businesses. And you can learn more about the Remittance Coalition and even join it if you want, if you visit that fedpaymentsimprovement.org site that's listed on slide 4. Slide 5 has the contents of the Small Business Payments Toolkit. First, it tells you about particular payment types. You'll see a lot of content about what we call ACH, which stands for Automated Clearinghouse, because ACH is a great way for small businesses to get started on electronic payments, and we'll be talking about that more in a minute. We have a section on working with your banker in the toolkit, including information you should bring to a meeting with your banker if you want to talk about how to improve your payments processes. We have a hefty section which contains fraud prevention and mitigation tips. And then finally, because we couldn't include everything in the toolkit that we wanted to, we have a nice section of resources that provide additional information, and you can see those links in the resources section of the toolkit. Next, I'm going to turn things over to Jim Smith, and I'll let him introduce himself, and then he's going to cover the section Payment Types Explained. Jim?
Well, thanks, Mary. And yeah, my name is Jim Smith with Union Bank and Trust Company in Lincoln, Nebraska, and I work with our Treasury Management Services area here at the bank. And what that means is I work with businesses large and small to help them with their cash flow and revenue cycle and make sure that they can make the most out of it. So we work pretty on a regular basis, pretty intimately with all the different types of payments that we describe in the toolkit. And I'm going to talk a little bit about those various types and just give you just kind of a high-level overview of all the different business payment types that are typically used out there. Some you're probably using on a regular basis, and maybe some you've just heard about or have wanted to know a little bit more about them. But on slide 7, you can see that we have a graphic up there that talks about the various different payments that are available to small businesses. First one being business checks, and I think we all pretty much know what a business check is. That's the paper document that you use. The more technical term gets into that it's drawn on a specific amount from the drawer to the payee. But much of those paper checks nowadays, once they get to the bank, are truncated electronically and processed within the system electronic. So there is some conversion happening with checks already. We do see that the total number of checks overall continue to decline. In 2012, they were down to half of what they were in 2013, but there's still a lot of checks out there. There's 18.3 billion, and we know that within the business community, checks are still fairly common, but most companies are starting to look at different ways that they can take advantage of other payment methods. So we're going to talk a little bit about ACH, and again, as Mary said, ACH just stands for Automated Clearinghouse. And I know as bankers we tend to speak in letters of the alphabet, but if somebody talks to you about ACH, there's other terms out there that are used interchangeably, such as EFT, Electronic Funds Transfer, e-check, electronic payment. But basically, ACH is a batch system, and what I mean by a batch system is that we receive multiple payments within a file of transactions, and that file could include 10 or 20 or 100 that the bank receives from our customers, which they typically refer to as originators. And using the ACH network, typically the Federal Reserve is one of the primary operators of the network. That's what we can use to send funds electronically. ACH typically happens in 1 to 2 day settlement time, so you always want to know a little bit in advance if you want to pay somebody that way. But you see them all the time. The most common is direct deposit of payroll, direct debit for recurring bills. They come in credits and debits. A credit, obviously, is when we've had one of our customers send us that payment file, and they want to send the money directly into one of their partners or vendors, directly into their bank account, no matter where they bank at. A debit, obviously, is just the reverse of that. If I was trying to collect payments from my customers, I can use the ACH system to debit their accounts and be able to make collections that way. And we'll talk, obviously, a lot more about ACH as we progress here. The other item here, Internet Bill Pay. Some of you may be using this, but basically that's an electronic payment service for one-time or recurring bill payments. Typically they're offered through your financial institution's online banking system, but there are also non-bank providers out there you may have heard of. Most of the bill payments, particularly within our organization, I know just through personal experience, the majority of those are going to be sent via ACH, so that's another great way to use a simple way to use the ACH system to pay someone. They want to send the online bill payment vendors, they want to send as many as they can electronically, as it really helps with them with integration and with their costs. You can send money from a specific bank account to a creditor or a vendor, things like loan payments, credit cards. You can pretty much pay anything, and it's going to be debited against your account, but very convenient. You have one portal where you can make a lot of payments through that. They're also available through non-bank providers, as I mentioned, and some bill pay services also offer electronic invoicing. In other words, they're giving your company the ability to put invoices out there that your customers can look at and pay. So it's just something that you need to check out if you're looking for that type of a provider as to whether you can go through your bank or through a third party that offers that. Wire transfer is the other more common form of electronic payment. Those are electronic transmittal of funds, very similar to ACH, but it is a very different system. So if you talk to your banker, you may confuse them if you refer to a wire transfer as an ACH, but I know those terms get used interchangeably quite a bit. The differences with wire transfers is going to be the fees involved, and typically once you send the funds, those are irrevocable. In other words, you can't get them back once they've been sent. And each wire is pretty much a single message that's going to be sent. The nice thing about it is the funds are going to be credited to that person's account on that same day. Credit and debit cards, another real common form of payment. We do see more companies beginning to use credit cards for their payables process, accounts payables process, to make payments. The thing about credit cards is they're essentially a line of credit, so there can be some setup in terms of underwriting for the credit card to be offered through the card issuer, and they are subject typically to interest balance or fees can be assessed on those accounts. And then debit cards, they're pretty much just like your personal debit card that you use today, but we do see a number of businesses use these for smaller type payments. They can potentially replace like a petty cash fund that maybe some companies may use or small businesses may use. The next on slide 8, I'm going to talk a little bit more about each of these payment channels and kind of give you a real brief pro and con about each. Business checks that we started with, that's really what we call a legacy system, and what we mean by that is just that checks have been around a long time. They continue to be used. They're widely accepted. I only need to know my bank account in order to make a payment with my check. The cons are obviously higher costs relative to some of these other payment channels, greater fraud risk. We continue to see more and more counterfeit check fraud, and there's much more manual handling with checks. And you also have the issue of mail delivery time that we're dependent upon the post office to make sure that that payment gets to the right destination. Wire transfers. In the lower left-hand corner of slide 8 there, the pros, it's highly secure, it's near real time, it's going to happen within minutes and certainly in the same day, and you have a very certain assurance of delivery of that to the right destination. The cons are the fees charged to both parties, not only to you when you make a wire transfer, but typically the recipient may incur some fees on there, and you obviously need to know the routing and account number for the person that you're sending it to. But you may see that come up with maybe a newer partner that you're going to where they request a wire transfer. ACH again, also much higher security and much lower fees. And when I say much lower fees with an ACH payment, you're talking pennies per transaction relative to a wire transfer, which could be $20 to $30 and up. Much more lower handling costs because it does lend itself much better to automation, moving the files or the payments electronically, and reduce fraud costs. We just don't see the fraud with ACH relative to business checks. The cons of ACH, as I mentioned earlier, 1 to 2 day settlement. It's going to take at least 1 day, or at least currently. There is some discussions about making ACH a same-day system, but right now it takes 1 to 2 days, and then obviously you need to know the account number of the person that you're sending the money to. Internet bill payment service. Pros would be the time savings in that you can make multiple payments within one portal, very convenient. Cost savings, I know with our institution, for less than $10 a month, you can make as many payments as you want. So very convenient, very very cost efficient and reduce the amount of paper checks. Cons, again, depending on who the money is being sent to, it could still go by check, but like I said, they're typically very high acceptance of ACH for those types of services, and just the initial payee setup of getting all those folks into the system. That's just really a one-time situation. Credit and debit cards, they're easy to use in terms of when you're making a payment. Visa, MasterCard, Discover, they've all done a great job of getting out there with merchants and are accepted pretty widely and domestically in other countries. You don't need to know a routing number or an account number. The cons, again, that typically there can be some fees in terms of using the card for payments and interest or those kinds of fees. Or if you want to accept cards, obviously there needs to be some interchange and some equipment that's involved. So those are the primary methods we have there, and just a little bit about each of those, and we'll talk a little bit more about electronic as we go on. So with slide 9, I'd like to turn it back over to Mary.
Thank you, Jim. The Federal Reserve conducts a payment study every few years so that we can track trends in usage of various payment types among U.S. consumers and businesses. And what we learned from the most recent study, and which has become apparent over the years, is that consumers, especially younger ones, are abandoning checks in favor of electronic payment types, especially debit and credit cards. But while that is true among consumers, businesses in the U.S. continue to rely very heavily on checks. In this section, I'm going to give you a quick overview of U.S. payment trends, and the key takeaway here that I want you to remember is that even though checks are popular for business-to-business payments, there is a definite trend away from checks as businesses are adopting more efficient and less costly electronic payment types. The slide on page 10 shows the results of a survey that was done of U.S. businesses by the Phoenix Tech Treasury Monitor Group, and they asked these businesses what % of transactions they make by various payment types. And as that pie chart shows us, nearly two-thirds, about 65% of all B2B payment transactions were made by check among these surveyed businesses. The second most popular payment type was ACH, followed by wire transfers, and then cards. But change is in the air, and as you can see on the next slide, there's a definite trend in the use of electronic payments among U.S. businesses. This graph tells us, if you look on the far right under checks, that 68% of the respondents of this survey say that they're writing fewer checks than they did the year before. And if you look on the left under ACH, nearly 8 in 10 said that their usage of ACH has increased over the past year. That middle set of bars, which refers to P cards or purchasing cards, tells us that the use of purchasing cards is also growing in popularity. Why is this? Why are businesses turning to electronic payment types? I'm going to ask Jim Smith to explain to us why it is that businesses find electronic payments appealing.
Thanks, Mary. And yeah, what are the benefits of electronic payments? So we've talked a lot about moving away from checks and moving to more electronic methods, but we've also talked about a few different ways that you can do it electronically. So what are businesses looking at when they look at electronic payments to try to decide which one's appropriate for their situation? And on the next slide on 13, we have the top factors driving electronic payments in the business world. These are the two most common forms of electronic payment, ACH, and it says P card there. And as Mary said, P card just means purchasing card, or some people call them procurement cards, or it can just come in the form of a regular old credit card. How do they compare with each other, and what drives businesses to choose one electronic payment over another? And it really just kind of depends on the business and the situation. But obviously, if you look at that very top horizontal bar there in terms of ACH to a card, ACH is going to be less expensive for you. It's going to save costs. There's been multiple studies out there in terms of cost savings to use electronic payments, and that is the most highly rated benefit of an ACH payment versus, say, checks or any other form of payments. As we know, companies of all sizes, organizations of all sizes are looking for ways to reduce costs. We're all trying to do more with less, and ACH definitely represents a very cost-effective way to transition from check payments to electronic payments. This chart was put out by an organization called PayStream Advisors based on a survey that they did. The other advantages that they identified are some of the other factors that businesses are looking at is security. We hear every day about different issues with payment or information security, and ACH has also been identified as offering better data security and ease of integration. And what I mean by that is it's typically fairly easy to download a file out of your accounts payable system, even if you're using something like QuickBooks, to be able to put into a payments portal and make that process much easier. Supplier acceptance is a big factor as well. I've known of different organizations in our bank where if they were able to pay one of their vendors electronically and have the money flow right into their checking account at their bank, they were able to maybe negotiate some discounts. That also makes that an additional factor. So you can see all the factors up there. I'm not going to go through each one of them, but there's definitely a lot of advantages for using either, but ACH comes out often on top in terms of some of the cost savings and some of the data security involved. So now I want to turn it over to Attila, and he's going to talk a little bit more about the Internet bill pay options.
Thank you, Jim. My name is Attila Csutak. I am part of the banking solutions team at Fiserv. We develop solutions that bank for financial institutions, and I'm going to talk about Internet bill pay. Online bill pay, as some FIs refer to most commonly, it's a very convenient and cost-effective way to pay your bills. This payment model is widely used in a consumer-to-business environment, but lately FIs, especially larger FIs, have loosened the restrictions with this payment model, and now they are being used by small businesses as well. Some FIs now provide that full end-to-end electronic solution as well that Jim alluded to earlier, that allows businesses and their vendors to manage the entire invoice and payment cycle electronically, thus allowing this shortening the DSO, the days of sales outstanding, and eliminating costs traditionally associated with the paper-based systems such as check printing, stamps, and the mail float. Jim, I'm going to give it back to you for page 15.
Thanks, Attila, and I can definitely agree with what you're saying about opening up bill pay services for businesses. We see a number of our business owners use bill pay as a convenient way to pay certain amounts of payments. I'm going to talk a little bit more about, on slide 15 here, ACH, some considerations when we're talking just about using the ACH system. Some things that you want to keep in mind or really key in on if you're considering this. The security and the reliability about ACH. Again, if someone gives the bank payment information, you can be assured that those funds are going to travel within the network, the secure network, in order to reach their destination, versus a check where you're relying upon a check payment to be mailed. ACH is especially useful for, like I said, batched. And what I mean by batched is that we've got multiple payments within a single file, so that can add some convenience in that you can make multiple payments within one transfer of information, and it's very easy to schedule payments. You, as the originator or the company, can set the date that those funds flow into the checking account that you want to push it into for your vendor or your partner. Definitely lower ongoing activity fees. I mean, we're talking pennies per transaction. There are going to be, like any system, going to be some setup involved, potentially some setup fees. It'll just depend upon your financial institution, and reduce fraud risk. I mean, when we talk about fraud within the ACH world, we're not seeing the type of fraud. I mean, obviously there's going to be some, but typically the way we see that come up is that somebody grabbed a business check and maybe used it on an online portal to pay their cable bill or something like that. And there are protections that you can work with your bank in terms of adding some security there, and we'll talk a little bit more about that later. With ACH, you can also include remittance information. Not a lot of people know or make use of that, but you can actually add what they call addenda records, which is basically information that can include information about the remittance that can be picked up by the person that you're paying, invoice information, inventory information. So there's some value-added things with ACH that not everyone avails to, but are certainly available to anyone. Implementation issues with ACH. There is going to be some bank underwriting, and what I mean by that is typically a bank's going to establish a dollar limit on the total amount of the file, and that total would be the total amount of payments that you can send or withdraw on any one day. And most banks will look at that much like they'll look at a loan or a credit card exposure. Depending on the dollar amount, they need some financial information from your organization in order to do that. The risk in that situation is that you're always sending payments out or always collecting payments out one day ahead. So there is a little bit of some transactional risk there that the bank has to address through that underwriting. And then like anything else, ACH, just as like check payments or any kind of check payment, you still want to make sure you have good procedures and controls in place. I mean, even if it is further automated, you still want to make sure you have the right checks and balances in place. So when does it make sense to use ACH? And we're on slide 16. Making any kind of a payment, really, but they are very popular with payroll. Direct deposit of payroll is probably the most common one that we see. You can also combine them with payroll cards or stored value cards if an employee doesn't have a checking account or can't get a checking account. There's split account options, which are popular. In other words, if someone wants to put money into their checking account as well as maybe a savings account as kind of a savings option. Recurring payments of all types to vendors for rent, for lease, loan payments. It can be used for paying taxes to different entities. And obviously I've already mentioned vendor payments that you can set up to flow directly into your vendors and gain some efficiencies there. And like I mentioned earlier, potentially maybe negotiate some discounts that way. You can also use it for receiving payments, monthly recurring payments. Give you an idea of service plans, like an IT service company. If somebody wants to pay them a monthly subscription, you can set it up so that it can automatically come out of your customer's checking account and flow into your account at your bank. Trash hauling, property rental, tuition, health club collections, all those things that really lend themselves well to, and just think of the savings in that if the money's going to flow directly into your bank account, you don't have to collect checks, you don't have to make deposits. All that part is eliminated. Balance consolidation is another tool. If you have multiple locations, maybe in multiple towns or multiple states, and you want to be able to bring those funds back into your bank account, ACH is another great way to do that. So how do you get started when you want to talk to your banker? Like, what are some of the things that you want to talk with them about on page 17? I mean, one thing I would recommend is to take a look at your bank's website. What kind of services do they have as far as for businesses or for small businesses? What are prominent? Do they offer ACH electronic transactions? Start with your branch banker. Typically, that's the person that has the highest amount of contact with businesses, particularly small businesses. Ask them to help you to make a review of what you're doing today. Have discussions with them about your issues that you have with banking, or maybe some pain points that you have, or time-consuming tasks, and ways that they can think of ways to partner with you and help you better utilize those electronic payments. Share a little bit more about your business or your processes so they have a good idea of what your processes are and how they can adapt some solutions to those. Just ask them about new businesses, or maybe just even, I've had some people just ask me, tell me what I don't know. Often if you just asking, and maybe they have some kind of an offering that could be a good solution for you. Do they offer fraud control services such as pause pay and ACH filter? Those are great ways to control check payments and electronic payments coming out of your account. And then lastly, it's fair to ask them an estimation of their fees. Based on the services that you've discussed, they should be able to give you an estimate of what the costs are going to be, both upfront and ongoing. So with that, we're going to dive in a little bit more with talk about fraud prevention, and I'll turn it back over to Mary.
Thanks very much, Jim. Well, unfortunately, all payment types carry the risk of fraud. So the Small Business Payment Toolkit offers basic education, dozens of tips, and practical advice that may help small businesses understand the precautions they can take to avoid losses due to payments fraud. Slide 19 contains a short list of some of the things that you will find in the toolkit relating to payments fraud. We have section on how to avoid purchasing card fraud. We have information, and Jim already filled you in about this a little bit, on bank services that can combat fraud, like account alerts or ACH debit blocks or post-note check services. And you should know that some of these services that you can obtain from your bank are free. So you should certainly find out which ones are free and avail yourselves of the ones that make sense to you. Also in the toolkit, we have a section on tips on how to avoid accepting fraudulent credit and debit cards, and there's some practical advice in there that you can share with your employees so that they can learn how to recognize fraudulent cards and you can avoid accepting them in the first place. Since education and training of employees is so important, we have a section on what you should share with your employees regarding all types of payment fraud. And since, unfortunately, data breaches are in the news far too often, we have a section, and Attila is going to be addressing this in a minute here, that provides some really common sense advice on how to make it, so that you don't make it easy for people who are trying to perpetrate data breaches to get at your important financial assets. Next, since check and ACH are two of the most common types of payment methods used by businesses, we're going to turn to Attila Csutak, and Attila is going to give us some examples of common check fraud and ACH fraud schemes, and he's going to share some advice from the toolkit on how to avoid being victimized by fraudsters. Attila?
Thank you, Mary. So check fraud, especially with the paper environment, regardless what type of payment instrument we're talking about here, payment fraud is one of the biggest risk management challenges facing businesses, and it is one that we have to battle on two fronts. Every survey provides results that show checks continue to be the dominant payment form targeted by fraudsters, and with 87% of these affected organizations reporting check fraud attempts in 2013, it's more relevant now than ever that businesses have to take a look at different payment methods in order to minimize their risks and their losses. What kind of examples that I can talk about with check fraud is forgery. For a business, forgery typically takes place when an internal employee, issues a check without the proper authorization. Fraudsters will try to steal a check, endorse it, and present it for payment at a different retail location other than that it originally was meant to be cashed in, or at a bank teller window, probably using bogus personal identification. Then we have counterfeiting and alteration. This is a method when fraudsters create counterfeit checks that look legitimate with watermarks, routing numbers, and the names of the real financial institution on it. Because of the introduction of inexpensive desktop publishing equipment and software, Fraudsters are sometimes a step ahead of this. They are able to create incredibly authentic-looking counterfeit checks. Once they completed a counterfeit check, they then try to deposit them in banks or use them as part of other frauds against consumers, or use them even to pay companies for products or services that they didn't want to do in the past. Another check fraud example is paper hanging. This has to do with how fraudsters purposely writing checks on closed accounts, their own or others. If they get their hands on a closed account information of a consumer, they can reorder checks on those accounts and use those checks to pay for bills or any services they want to. Another example of check fraud is check kiting. This is this particular fraud is when you open accounts at 2 or more institutions and you use the mail float time that's available to create fraudulent balances. This particular fraud has become a lot easier in recent years due to the new regulations requiring financial institutions to make funds available a lot sooner through image cash letter. And combined with increasingly competitive banking practices, it's a lot harder to catch these type of fraud activities. Another example of check fraud is unsolicited check fraud, where the fraudster might send you a check that you didn't have a legitimate reason to receive, but when you cash it in, you might be authorizing the purchase of items you didn't ask for, or you might be signing up for a loan, or something else that you didn't ask for. As a precaution, you want to ensure that your checks are printed by an established and respectable source. Talk to your financial institution. They are happy to help you and point you to the right place and the right direction. You want to make sure that it contains these checks contains the proper security features that will help you combat counterfeiting in the future. If you do end up, if you continue using checks, you want to make sure that you store those checks in a safe location, including the deposit slips, any bank statements, and even canceled checks. You want to make sure that you keep them locked up in your office. In order to establish and follow internal procedures, you want to introduce dual authorization or controls when you pay a vendor using a check. Separate the check writing and the account reconciliation function, and also limit the number of signers who can sign that check before it goes out the door. Going on to page 21, we're going to talk a little bit about ACH fraud. To avoid ACH fraud, you want to establish and follow properly practically the same internal procedures that you might have for checks. In this case, you want to check references and do background checks for employees that you are hiring that are going to be working in this with this sensitive data and with the payment process. You want to reconcile your account daily. Log into your bank account, look at your statement, and make sure that the proper transaction went out and validate that the information that was put in is correct. Notify your financial institution of any suspicion transaction immediately. This way, you are helping the financial institution to track down the transaction a lot faster. If banks have time, they can stop that transaction in transit. Address exceptions and make timely returns. If you do have transactions that were sent out by mistake, address those. Don't let them hang in the account for any time, if possible. Again, it comes down to limiting access to sensitive data online as well as with the paper environment. Restrict access to computers where these payments are inputted every day. If it's possible, don't use the same terminal or computer that you send your payments out electronically to browse the web or for any other internal business activity. Limit the ACH debit activity if you can to one or maybe two accounts. This way it's easier to follow the transactions and reconcile at the end of the day too. Use fraud prevention services offered by your financial institution. When you work with your financial institution, ask them what kind of fraud prevention services they provide when you sign up for a specific electronic payment. Be that an ACH debit activity report or ACH filters or ACH positive pay and or ACH positive payee. Use alerts. Most financial institutions allow and provide free alerts to all businesses as long as they use their applications on a daily basis. When it comes to passwords, make sure you use strong passwords. Don't use the same password across multiple banks, across multiple systems. Change them often, especially if you are using that same computer for other activities other than payments. Implement the best practices that you are following for the paper payment environment. Have your IT data security updates, internal security applications. If you have a firewall, make sure you are using the application through the firewall so you can limit your exposure to fraud. And with that, Jim, I think we are up on page 22.
Thanks, Attila. Yeah, I wanted to talk about one very specific method of fraud, and we've seen in our area a lot of activity on, and it relates to phishing, email phishing. If you're not familiar with the term, really what they mean by phishing is that the fraudsters are sending out hundreds or thousands of emails to various addresses, and they're just hoping that one person or a few people, based on the volume that they're sending out, or are going to try that email. They're going to send some kind of a link within that email, and within that link they're going to use that as a way into your network or into your PC to plant malware, to be able to essentially take over your computer, record passwords, potentially even gain access. So, and that's something that you want to leverage this toolkit, some of the fraud information in here, because you really need to educate everybody in your organization. I mean, you may know about this as the manager or the owner, but it just takes one person to click on one of those links. Some of them look very basic. Some of them may look like they're from very reputable firms or governmental entities. I've seen all types from the IRS. But this example here that we had, again, was a very specific subset within that. We've seen a number of these attempts this year. This was a Omaha commodities broker. I don't know if you would have heard of this, Scholar, where the CFO or someone within the CFO department of the company had received an email from the president of the company asking him to make various wire transfers over to China, I think in this case, and assuming that the email was legitimate from somebody within the organization, the company ended up wiring out and losing about $17 million because of this scam. And it's happening to different companies all over. In other words, that someone's able to take over an internal email account or make it look like they took over an email account. So educate your employees within your company that if they get some kind of an email like that asking the president or the CFO or whoever, asking them to make some kind of a fiscal transaction to send money outside of the bank to basically, we talk about trust but verify. Get on the phone, call that person, find them face-to-face, and just double-check and make sure this is a legitimate request and that they really wanted that money to leave the bank account. So I want to turn it back over to Attila to talk a little bit more about fraud.
Thank you, Jim. And I agree with you, Jim. If you don't recognize the email, if you don't recognize the address that the email came from, don't click on it. it's going to allow you to be exposed to less fraudster activity that way too. You want to secure your IT infrastructure too if you can. Invest in a good firewall and antivirus program. Or, as I said before, speak with your banker. They are very familiar with this. If the sales representative is not, they're going to bring in the proper security subject matter experts to help you with this if necessary. I mentioned earlier that you might want to use a dedicated computer for all your banking activities. Make sure that it's only used for those activities, and no social media, email, web surfing can be used on it because it's going to open up that machine to all the vulnerabilities that are out there today in the internet world. That password policy institutes one. Change the password as often as 60 to 90 days. Use a strong password rule. Use different passwords for different banking applications and system accounts. When you hire employees, make sure you do an employee background check. Basic pre-employment background checks are a good practice for any small business, large business, especially when it comes to accounting activities and accounting tasks that are going to be performed by these employees. And again, as Jim alluded on to, educate your staff. You might be very familiar with all these payment-related fraud activities, but hold regular training sessions if you have to, using the toolkit and a number of other resources that are available on internet today on the bank site. Make it a habit. Held quarterly training sessions for all of your employees, and update your internal procedures if something changes. Going on to page 24, some of these items, we talked about them already. Educate your employees, monitor and measure the fraud attempts and losses. And again, if you do encounter a fraud, notify your financial institution immediately because they are in the best position to help you resolve the issue. Mary, I am giving it back to you.
Thank you, Attila. Moving on to slide 25. In closing, we hope that today's webinar gets you thinking about how you can improve payments processes in your own small business, either right now or perhaps at some time in the near future. We want to remind you to download the toolkit. It is free. The link to obtain the toolkit is listed in the resources section and on a previous slide. We want to encourage you to set up time to talk to your banker about how you can improve your payments process and possibly switch some of those payments away from paper-based checks into more efficient electronic methods. We want you to know, too, that we are in the throes of developing version 2 of the Small Business Payments Toolkit, and we're going to include some additional timely topics such as the migration from magnetic stripe cards to EMV or chip cards and what that means for small business. We'll have a section on new and emerging alternative payment types. We're going to have more on ACH. We're going to have some case studies to show how some small businesses were able to apply some of these tips and benefit. And if you have ideas for what you'd like to see us cover in the next version of the Small Business Payments Toolkit, you can contact us by sending us an email that is the address of which is listed on page 2 of the toolkit. Finally, we have a resources section listed on page 27 of the slide deck, and we encourage you, if you have more time and have interest, to explore those resources as well as the resources that are listed at the end of the toolkit itself. So with that, I'm going to turn matters back to Amy Vaughn, our moderator, and we will take your questions. Amy?
Okay, thank you. And I would just like to remind you all that you can ask questions through the webinar tool. So if you will submit those now, we will get to them. So let me look through, and we do have a question for Jim. What is the difference between a personal check and a business check?
Thanks, Amy. Basically, other than being difference in ownership of the accounts. Typically a personal check, as most of you know, is going to be the smaller type versus a business check, which is just typically a larger business check size. But a lot of times what they'll key off of a business check versus a personal check is typically along the micro line on the bottom of the check. Typically with a business check, they put the check number before the routing number, and typically with a business check, it's going to be in another position. And the reason I bring that up is for truncation or conversion of a check to an electronic payment. That's really the thing that they're going to key off of, or what systems and software are going to key off of in determining whether they can convert that check to an electronic payment or another form. So that's probably the biggest difference between personal and business.
Okay, thank you, Jim. Here's another question that perhaps Attila could help us answer. What does it mean to use dual control to authorize payments?
Sure. Thank you. Dual control adds another layer of security, if you will, to your business online profile. So when you log into a financial institution portal, it allows you to segregate the payment activities, if you will, in between two people. With the dual control, you are enforcing your business's internal controls by requiring transaction approval for all online users, including the system administrator, too. With using dual control, you are reducing the risk and fraud, and you promote security by requiring that two different users, each with their own user ID and passwords, touch every single transaction. It allows you to decrease errors by having one person review the transaction information that was inputted by the previous person. It also gives you multiple authorized users the ability to approve the transaction, as well as ensures that your business can process the transaction while persons or users that are accessing the application are out of office or on vacation.
Okay, thank you, Attila. Another question. Can you say a little bit more about what bank underwriting means for ACH payments? Jim, I think this one's directed to you.
Yeah, I can take that one. And what I mean by bank underwriting is, as you know, if you were going to apply for a credit card or a loan of some type or a line of credit, typically whoever is making that loan is going to want to know a little bit more about your company and your ability to repay, or your ability to take ongoing expenses. So with ACH, there is going to be some exposure both to you and the bank. If, let's say, if you sent a payment file today to pay someone else for, let's say, $10,000, and tomorrow when that payment actually settles, for whatever reason there's no money in the checking account for that payment to come out of, that's the payment risk to both you and the bank. So they're going to want to know a little bit more, like I said, much like, not exactly the same, but much like a loan, about your company in order to know if you can stand or foot that dollar amount.
Okay, thank you for that. Here's another question that came in. Which payment type experiences the most fraud? Mary, could you answer that?
Yeah, thank you, Amy. I'd be glad to. Well, the dominant fraud type experienced by U.S. business has to do with checks. And I guess that's not surprising, since checks is the most common type of payment method relied on by U.S. businesses. We here at the Payments Information and Outreach Office at the Minneapolis Fed are always very interested in a report that we get every year that's produced by the Association for Financial Professionals. They conduct a payments, fraud, and control survey of U.S. businesses. And in the year of 2014, which is the most recent year that the survey was conducted, they found that 62% of the companies surveyed said that they were targets of payments fraud. And among that group, 77%, over 3/4, said that checks was the #1 area that fraudsters attempted to attack. And when you look at it another way, also from the Payments Fraud and Control Survey, you can see that checks are also the area that experience the greatest financial losses. In fact, of those U.S. companies in the survey that experienced a dollar loss from payments fraud, 44% said that checks were responsible for the highest dollar loss.
Okay, thank you. And a question came in about, are there any safeguards to consider when doing business with offshore businesses? Attila or Jim, could you speak to that?
Well, this is Jim. I can talk a little bit about that because we see that come up with more and more local organizations that are doing business overseas. I can give you one example of a company that sells some large ticket items. They're a manufacturing company, and typically if they want to get paid, they're asking it to be done by wire transfer in this case, and they are providing someone on the other end that they may or may not know their bank information, their routing information, and their account number. So one protection that we've done in that case is to set up a checking account that's only used for that purpose. In other words, immediately when funds are transferred into that account, we're going to transfer it over to their regular operating account. So it never really has a balance in it. If someone were to attempt some kind of fraud by attempting to draw money out of that account electronically or by other means, there's nothing there. So that's one example of a barrier that you can put in place. And then also we talked a little bit about POS Pay and ACH Filter that can be added to the account that can restrict that information. POS Pay, you're basically telling the bank what checks you've issued on the bank, and it stops or exceptions any other check. And the same way with electronic. It's going to do the same thing with electronic payments. So those are a couple different layers that you can add, but yeah, that's a great question.
And if I may jump in here too, like I mentioned before, when you employ, when you go through the employment process, do a background check. The same with the vendor too. Do a background check on them. Work with your financial institution. Make sure that you don't send the first time a transaction in full amount. Do a test payment if you have to. If you don't know or you don't have the means to meet this vendor face-to-face, you want to use your banking representative in all of this process.
Okay, thank you very much. And we do not have any more questions at this time, so I'll go ahead and close the session by thanking you all for joining us today, and a very special thanks to Jim, Attila, and Mary for their time. We will be sending out a short survey, so please complete that. Send in your feedback so we know how we're doing. This concludes our webinar. Have a great day, everyone.